getting fully invested and focusing on which stocks we want to have in the portfolio. Gary Glover from Novus Capital is the one guiding us through the charts today. Good morning, Gary. How are you?
Yeah, I'm good, Chris.
Now, I'm looking at your report for this week. We've finally got some charts of individual shares that you're looking at buying, and that's kind of the first time we've had them for a little while. And that reminds me of back in June when we had a hiatus where you were struggling to find anything you wanted to buy, but you were getting ready to load up. Is this kind of reminding you of back then?
Yeah, look, I'm just sort of been planning for this sort of, early to sort of mid-October low here. So I just feel like I should be, got rid of all my short positions, should just be adding to the portfolio here. I am feeling a little bit like Robinson Crusoe. I sort of feel like I'm the only person who thinks the market can bounce strongly here. So that's a little bit concerning here. But saying that, that's the way it normally should be. It should be maximum bearishness, and then no one should be wanting to go long. And that's usually when lows come in. And then probably November was sort of similar, was sort of pretty bearish there at the top there. Different view from everyone else, and probably had a couple of bears sort of on the same side of me. It doesn't feel like there's too many bulls here at the moment, but yeah, definitely seeing bearish consensus is through the roof. So level of put the call parity is through the roof. Trading short ETFs through the roof. All the surveys sort of bearishness through the roof. So definitely everyone's super bearish out there at the moment. So we've got the classic sort of sentiment signs there. Seeing things like on magazine covers as well, like bearishness, and obviously the strength of the US dollar as well. So just some of the classic signs you see there. But need a bit of a catalyst here as well, Chris, as well. So I think CPI on Thursday is probably going to be big. So that's probably, definitely want to sort of see CPI sort of starting to show some signs of sort of cooling there. So so that's going to be pretty important there. Like if CPI doesn't cool, then the market will probably go a bit lower here, which will be not what I want to see. But I think our cycles are suggesting here we're pretty close here. So I'm just been adding to the portfolio. And I'll probably add a little bit today and maybe a little bit tomorrow there, into any weakness there. So, but just looking at the sort of sectors and stocks that I like here, staying away from commodities still think that's the cycle just to be careful of. No, they're sort of hanging on there. But yeah, we'll just try and build a few quality positions here over the next couple of days. Hope to get maybe 100% invested. But yeah, just some of those ranges just need to go a little bit lower there. Just looks a little unfinished on the downside, some of the markets. But yeah, maybe we can go through those charts anyway.
That's a good point to have a look. And you've got the NASDAQ as your first one for this week. And you've noted that it has been a really fast and sharp fall, but you're saying it looks like a little unfinished. So what do you mean by unfinished there?
Just like to sort of see these things normally sort of square out a bit more. So like normally there's sort of bigger lows when this is sort of, we've had a pretty decent pullback here, this bear market's lasted for quite a while as well. So oftentimes they sort of, they should sort of square out sort of, key Fibonacci levels or key sort of ranges, or, big 50% of the range sort of stuff here, or should be sort of squaring out ranges there. So we're really close to sort of some key Fibonacci levels, like on the weekly and monthly charts, and we're pretty close to squaring out some ranges as well. We're just a little bit shy of them. So just feel like they're all, I think like the NASDAQ around 10,200 would be, nice sort of squaring there. I think the S&P around 35.25 would be just nice sort of squaring as well. So feels like we're close to some really big levels there, like technically, but we're just not quite there. And we're right in that time frame here as well. So it's sort of, I thought it was probably October 6th to October 10 or sort of, that was sort of really where I thought that was really the heat map of where I thought the bear cycle might finish, based on sort of more faster moving bearish declines of the past, and sort of similar sort of midterm years and similar sort of second years of the decade when we get this fast leg down, they've normally sort of gotten to the low a little faster than the high lows. So a lot of our 60-year cycle around our high lows sort of can push out to or the end of October, or probably around that sort of 19th to sort of 23rd sort of timing there. But that's often been the high low cycle. It's been a more protracted. This has been a lot faster on the way down here. So normally this last leg here is normally a lot more impulsive, and it finds a low quicker. So yeah, so that's why I think we could be pretty close here. I think it's probably all going to coincide with a CPI here on Thursday. So I think we're probably, fingers crossed here. I think we might be a couple of days away from a bit of a really important low here. But just would like to see this go a little lower here, and yeah, just wash out here. But yeah, it feels like we're pretty close here. Just seeing some early signs here. Definitely some of the volume on the up days was a little heavier, and the last few days on the down have been a little lighter there, but not super obvious at this stage. So still need to see a little bit more. Have to see a follow through day, which is probably a week away at least anyway, seeing something like that. But yeah, so still got to be a little bit cautious here. Maybe I've sort of probably gone on a little early here. But yeah, the cycles have been bang on this year, so just kind of trusting in those. Everyone's super bearish here, but yeah, we'd love to see this. Those markets come sort of slightly lower here and tag some of these key ranges here, but it does feel like we're pretty close here. Could be a couple of days away, I think, over from the low here.
Well, that's probably a good point to move over to the Aussie, because the Aussie has been moving while sort of mirroring. It's been coming down bearish. You said right at the very start it would have relative strength, which it has had, but now you're moving to the side of thinking, well, is it that we could have we might meet a low with the US markets around the same time. We could possibly retest it when the US markets are making higher lows, or we might even come to a lower low. Is that still weighed down by the commodity exposure?
Yeah, so historically there's sort of these growth crunches. Obviously, us being more of a value market there, we tend to hold up a bit better. So we've done that. But then coming out of this sort of growth crunch as well, we tend to lag other markets there, and usually commodities is the reason why. Just because typically we go through that. Bonds decline first, and then stocks go second, and then commodities third here. So yeah, but look, there's some risk there. I could be wrong with that. Obviously, if high inflation persists, then obviously markets might remain a bit weaker here. And then if we sort of have high inflation, and then commodities might outperform. But I think if we do see some of the easing in inflation readings there, and we're sort of starting to see some of those numbers starting to ease off here, then I think commodities could come back here. So that's probably we do sort of want that longer term anyway for markets, but yeah, don't always get what you want, but just got to respect that cycle there. That's the way the cycle's mapped out in the past here. So this cycle so far has followed the classic path as well. So yeah, so until we sort of see something different here, but so we're pretty close here. I think that US dollar sort of, that looks like it's sort of peaked as well. So very, very exhaustive there. So I just think that's definitely sort of a lot of exhaustive characteristics in some of these markets here. So it just feels like we're pretty close here to a bit of a shift here.
Well, the Dow is the last one on the list, and you've mentioned that 60-year cycle, which has really been bang on this whole duration, especially throughout 2022. It's just been phenomenal how you've picked those lows, highs, bang, high, and just the timing of them has just been impeccable. So what's the 60-year cycle saying for the Dow? Like, is it more towards the the NASDAQ, which is growth, or maybe more like the Aussie on the value side?
Yeah, so we're just pretty close here again. So see how, it's pretty similar to the NASDAQ and the S&P. We're sort of like that, we're so close to the 50% retracement point. So that's a bit of a big level there. So those other markets are pretty similar. Squaring out the ranges as well, we're sort of, those levels sort of line up pretty well if we square off the downward range as well. So we just got some really important levels here, just slightly lower here. So just need this, my concern is, maybe it's too obvious here. Obviously, everyone's sort of waiting for it here. Everyone's like waiting for this washout as well. So that worries me that everyone can be waiting for this last leg down to wash out, the last panic, So yeah, look, I still sort of trying to add a little bit here, trying to look at some of the stocks here, but probably just feels like we're pretty close here. Just need to come back slightly lower here, but hopefully this can be all, might get there the next couple of days here. Feels like we're pretty close in timing here in terms of me. Just normally this sort of cycle normally happens a lot faster than the other cycles. So I still think we're probably only a couple of days away from potentially finding a pretty important low, but we'll see. We'll find out sort of Thursday night whether that view is right or not.
Well, if that does end up being the turning point in the market rallies from here, you've now got a list of trading shares that you'll be scanning, buying, or already have started to buy throughout this week. The first one you've got here is Macquarie Group MQG. Now, this is, you were just saying before we started recording, the point that it's at now is kind of right back towards those pre-COVID highs. So is that a critical point for Macquarie?
Yeah, we saw a lot of stocks actually in the ASX 200 bounce off this level in June. So like a lot of stocks came back to the 2020 high and then bounced off that. That was sort of key level. So Macquarie didn't get all the way down there, and he got back to that 38 fib there. But this is a sort of such a strong stock here. It's always sort of hard to buy Macquarie. Just see it's been a bit of a growth favourite there. And but it's a pretty big decline there, 217 down to sort of 150 odd there. It's a pretty decent sort of correction in price there. Just no surprise to sort of see some support coming in around that 153 there. So I just think anything around 155, 156 there is probably a pretty good buy in there. It's just one of those stocks that's sort of always hard to buy there because it's
well supported.
Well supported, a bit like Combank, obviously, sort of the number one bank out of the four there, sort of similar. So some of these really strong stocks, they just tend to bounce back pretty quickly. I think kind of Macquarie is one of those. So, but I think that looks pretty good there. Good technical level, pretty healthy correction now. Definitely the volume, seen the volume increase the last couple of weeks as well. So starting to see a bit of accumulation type volume starting to occur after these bigger moves here. So, I'm looking to sort of just see volume increase here, sort of show signs of accumulation there. The one thing I've seen a lot of stocks is I saw a nice bounce, and then we've seen a bit of a pullback here, and I've seen the volume dry up here as well, Chris, the last few days. So the last few days when sort of stocks have pulled back here, we've sort of come back on declining volume as well. So some technical signs there sort of showing us some positivity there, but we'll definitely need to sort of see a bit of follow through here by the end of this week.
We'll look for that definitely with that inflation print. If that's the financial that you've picked up, you've also looked to add to the portfolio some healthcare, and you've picked HLS as the chart to put in this week. So HLS is one you've looked at a few times before. That retracement is coming back to that 61.8, which is that coincidentally an old high as well?
Yeah, so an old high, big Fibonacci level, pretty large correction here as well in pricing now. Coming back to some pretty, interesting sort of PEs valuation-wise in the stock here. So in a sector that I think is probably going to outperform here in the next 1 or 2 years as well. So, healthcare is sort of one of those sort of, sectors that probably, inflation or not, you're gonna pay to get things done. So you're gonna. It's not being one of those things you sort of give up.
It's not like waiting for a car and waiting for the price to come down and buy a new one next year. You're going to go to the doctor today.
So I mean, things like consumer staples, obviously your groceries and stuff like that, you won't give up. Your healthcare, things like you won't give up. So there's just certain things you won't give up in high inflationary periods. So Yeah, so I just feel like healthcare's, and healthcare's had a tough time with COVID here. I just think we're now sort of coming away from those restrictions there. So yeah, so I like this level here around 330. It's already had a little bit of a bounce from there. Yeah, probably just need to see a bit more volume, but we've definitely seen a bit of volume here over the last month. So, but yeah, it looks like a big level here to me. So I like that stock here. It's just in the right, good sector for me. Good valuation, good big technical level there. Starting to see a bit of volume there as well. So yeah, just some good signs there.
Well, the next one you've put through into the portfolio is working on the diversification side of things, in the sense that when we think of a macro level, many businesses in the country are complaining about skills shortages. And in Australia, the first place you look for when you look for a job or to post a job, it's SEEK. So
Exactly.
you seeing confidence with buying that company?
I just think, it's had a large correction here as well. So it's basically halved and valued SEEK. So obviously, look, this has been a growth crunch. So you sort of see that, some of these sort of stocks come off quite a bit here. So it's had a pretty decent pullback there. Come back to some reasonable valuations levels, sort of, PEs in a sort of under 20 there, which you don't often get to buy SEEK in those sort of kind of lower valuations there. So yeah, just notice the sort of last leg down, come back and retested the low and then sort of bounce from there, look a little bit of a false break here. So got a little bit of bullish divergence, just got a few signs in there, some decent volume as well in there. So yeah, just like what I'm seeing in there. So again, just looking for sectors that I think can outperform, and yeah, looking for the price action, looking for some volume confirmation. So yeah, I think that looks really good. So yeah, I'll have added to that. So just like I think that looks pretty decent.
The next one on your list is Flight Centre. You've covered this one a fair few times. You've traded it pretty successfully over the last couple of years, and it's back on your list once again as we get that chart to load up. So Flight Centre's sort of, well, it's been on the nose like the rest of the market. What's the attraction? Where are you getting the levels from?
Looks a little bearish here because obviously we've broken below that major trend line with heaps of touches there. But just notice these sort of stocks have come back to sort of big ranges there. So notice sort of Qantas came back to a big range, Webjet as well in the same sector, come back to sort of big low there. So you can just sort of see this that sort of mid 14s there as a big level technically in the past for it. So just know sometimes they sort of can meander down like this. They can sort of break here and then find support here. So I just quite like the look of this, sort of getting a bit of volume here coming in on the daily as well. So yeah, I just sort of started off with a bit of a starting position here. I just like what I saw out of the low, and some good volume, a bit of a pullback here. I mean, even like the last 3 or 4 days here, we've pulled back and there's no volume come in as well. So again, we're sort of seeing prices sort of drift back here, but the sellers, selling activity is drying up here. So yeah, so I think that looks pretty interesting to me. So yeah, just a bit of a starting position there. I'll probably keep my stop underneath that that sort of trend line there. Yeah, but some good signs there. I'll probably just use the last low as my stop there.
Nice. Well, to diversify it once more, you've actually got some property exposure in there, which is kind of rare for you to put through in the portfolios.
It is, yeah. But again, this is another market darling here, a bit like Macquarie. This is probably in that sort of property trust area. Everyone was, bullish Goodman's all last year up into the top of the market there. It was sort of this is the one you had to be long, So of course, this thing's had a pretty decent correction there now. So 3 legs down as well. So pretty heavily sort of pull back, come back. So what, 2/3 of the range here. So bit of a technical zone to sort of keep an eye on there. Starting to see a bit of volume come in at the low here for this stock as well here. Just saw a bit of volume come in too the last couple of weeks here. So there was a few weeks down there where we're probably pretty light. But yeah, definitely seeing a bit of activity here. So again, just seeing some early signs here. So saw some pretty good volume off that low. And again, we've pulled back here like 3 or 4 days here. The volume's dried up again. So so yeah, I just like to see some volume coming in here at the lows. pulling back on lighter volume there. So it's a little sort of V-shaped at the moment just because the market is pretty volatile, but that's how often the lows can come in here. Just, those sort of stronger stocks there will find a little bit of action early. They'll bounce kind of strongly on some good volume. And then you'll sort of see them sort of slide back here on some lighter volume there. Yeah, so the key there is sort of buy them near the last low, and then sort of have a little stop maybe just underneath or something. So, but look, yeah, it might be a little early here, but I just feel like we're right in the window here. Some of the pricing activity is interesting here. So just a few things I'm sort of liking here. So yeah, it might be a little early, but yeah, just feel like they're sort of putting some of these quality names in the portfolio here, sort of, just maybe start off sort of small positions there and sort of build into it.
Well, you mentioned quality names. One of the favorite names coming out of into COVID lockdowns and out of COVID lockdowns was still Woolworths. That had a phenomenal run. You've put that into this week's report and you adding that to the model portfolio. Can you sort of talk about this heightened volatility that it's had and how that affects your buying decisions?
Yes, I mean, I guess, again, look, the thing about all these names so far is it's sort of they're all sort of sectors I like. So even like Goodman's, talking about property trusts there, they're more in that sort of logistics sort of space there. So, one of the reasons why people like that stock is that they don't have a lot of the office sort of space, which is, everyone's worried about. They have more sort of logistics and supply chain sort of stuff there, which everyone is more optimistic about. But I mean, Woolworths, again, it's another staple here as well. So, worst case scenario, if we are in a high inflationary period, it's just not one of the things we're going to,
not going to stop eating.
No. Look, you might take some cheaper options there. So obviously, you might have chicken instead of lamb or something, but yeah, we're still going to sort of, so, more likely to probably eat at home rather than eat out too. So, it's usually pretty good for sort of staples there. So, I've sort of gone for sectors here which have traditionally done well in high inflation periods and also done well in normal periods. So it's either way we go here, we should still do pretty well. So notice this has had a pretty decent pullback there, come back to a bit of a big Fibonacci level there around that 38.2 level. It's just a pretty decent correction. Had quite a few weeks down here. So it's a pretty V-shaped orientation here. Big move back up into the range here. So, if we are in a bit of a, worst case scenario, I'm wrong here, we don't get a big advance here out of the market here, we're probably just going to go through a bit of a grind here. So those sort of 70s and 40s markets, they had big moves, but they just went up big and came back big. So you end up getting these big sort of sideways ranges there. So so I mean, what's to say we can't trade between 33 and 39? So it's like, rally 20%, pull back, 20% rally again, if that could be the framework, possibly. So, just sort of keeping in industries alike that, technical zones as well. So, I think there has been a bit of a technical, I find it, technical market here. Like the sort of charts have been pretty reliable. So, looking for volume coming in and coming back to decent ranges and then waiting for that sort of change and trend and following that. So I just think we're just going to keep following that path here. So again, I just think these stocks are all sort of, well positioned either way. So I think, we're depending on, if inflation is going to hang around, they'll do well. If the inflation sort of subsides, they'll do well as well. So just a little bit defensive in some regards, but just sort of hedging my bets both ways there, you might say.
Nice. Conservative construction of a portfolio.
Yeah, and I've got a bit of beta and a few growth names in there as well. And, I've taken a bit of a US share exposure as well. So the one thing I haven't done is sort of done too much Aussie funds. And I've, just because the commodities has traditionally sort of dragged us lower here a month or two later here. So that's the only sort of caution I've got there, is it just feels like those commodities are still pretty high hanging around. So I just got some concerns around some of those commodities there. But yeah, interesting market here. But I think by Thursday here, we'll the CPI print is going to be super important, So yeah, so it'll be interesting there. I say it's
Well,
yeah.
You're talking about CPI print. You've talked about 60-year cycles, and you've picked up some interesting tweets. Now, some research I've seen over the last week or so has been how volatile October can be. What's this tweet you've got here? How's that talking about October?
Yeah, I just noticed just different traders sort of posting sort of some October low sort of stuff there. So this one's interesting here from Master Wu, who posted some interesting sort of charts and stuff there. I think he's a bit more sort of shorter term trader, but just thought this is pretty interesting here, like looking at some of the major lows in market. But look how many major lows come in October. It's just it's a huge outlier month here. So just so we tend to get some big bounces out of October. That's just looks pretty interesting there. That's something I've noticed in the past as well. It looks pretty. Yeah, I just think we're probably going to see a bit of an important low here. We've just got all the classic signs here. Got extreme fear, and everyone's way short here, and everyone's expecting the worst here. And obviously, markets have had a fairly decent decline here. So, so it is. It's pretty interesting there. I saw. I don't know if it was actually Coppo or someone else there was talking about. Might have been like, I think, maybe 7th of the last, or maybe the last 12 October lows there, 7 of them are coming midterm years as well, which is pretty interesting as well. Something like that. So,
it's interesting overlays and different cycles, which is probably good with the other tweet that you've picked up, which is the 60-year cycle. So this is a pretty cool chart where the colors, what do these colors mean on? So this is the chart of Dow Jones over many years.
So I follow a few different guys on Twitter there, but I just noticed Gann cycles there. Sort of just interesting here from some timing here. So literally, it's just sort of suggesting here that October 22 is an important month there, just from a time point of view. So it's literally 360 months, sort of from the 92 low. I think it's 240 from the 96 low. 100. I think it's like 120 from the 12th low. I think it's 180 days from the 2007 high. That's pretty important as well. So so we just got some really strong timing here from a cycle point of view, from sort of how many months. There's some really important timings there. So just think this is going to be a really important month here in equity markets there. Probably just need to see a bit more of a washout there, but just feels like we've got all the hallmarks for a low here. We probably haven't quite seen it yet, but feels like we're pretty close here. So it should be. I think this is going to. I should think by the end of this week here, it's going to be a super important week for equity markets. So yeah.
That's a good point to look at. We've got the shares to look at this week. We've got had the insights for the charts, and we know the timing points that you're looking for turning.
Yeah, this could be the most important week of the year for equities. Don't say that lightly. I mean that. Actually, I really think this is could be the most important week. How this week finishes will be really super important for equities.
Well, that's a pretty strong statement, but as you say, you don't say it lightly. So we'll come back again next week and see what happens. And I think we'll be talking on Friday just after the print about momentum stocks. So we'll get some insight to how it's moving.
Exactly. Hopefully I don't get burnt too much.
Thanks very much, Gary Glover. Thank you.
Thanks, Chris.
If you want to see more of Gary's reports, you can click on the right-hand side for the playlist there, and then some of the trading strategies that he often talks about on the right-hand side as well.